Hello everyone! Hello everyone! I don't know whether I'm recording, but what the hell? Here we go! I don't know whether I doubled up on that, but welcome back to the RationalInvestor.com's Broiler Chicken Show. Let's see if YouTube's working. Welcome back to the Rational. That's cool. All right, looks like we're rocking and rolling. Let's see. Check in on OBS. Looks like it's humming away, and I see that got a couple people over there on the YouTube chat. We'll do our rocker salute to get going. Rocker. There we go. All right, everybody's feeling good now, and let's see. Hey, there's PMA Bull Alex. PMA Bull Alex is having fun with harmonics now, and actually it's cool because the level 3ers are just. They just did that module, and so we're letting them into the harmonics room, and Igor is probably just blowing them away with all his charts. Gotta say, super impressed with these TRIers. Community's coming along really nicely. And what's really cool is Kavark, did you let Ryan in there? Is somebody else? I don't know whether somebody else is in here with me helping me drive the bus. Oh, there you are. Cool. Okay. I was wondering what happened there. Thanks, man. Hey, look at just what I'm saying there. I totally didn't expect that. Kevin's got my back. Totally awesome. Welcome to the Frivolity. Today, of course, you can see it's middle of October. Actually, tomorrow technically is a holiday here in Canada. It's Canadian Thanksgiving. Although, you know, when you look outside, man, you never know fall was coming here. I suppose we're starting to get a little bit of rain, but trees really haven't turned yet. But I suppose back east, probably the fall colors are in full bloom. So these weekend shows, I would like to try and really address level oneers. They've got a whole bunch of sort of big questions. I'm sure YouTube audience would love to hear Brian's rants about these various things. So, and also too, anybody who's sort of taking notes for the daily brief recap, the post that we do on the site. If I happen to make reference to a particular topic, it might be cool to have like a hashtag in the description to that, so people could search for that on the site. So level oneers, they're going through eating their vegetables right now, and this is a very tough time. It's probably information overload. I guess a couple weeks ago we introduced them to sort of strategic planning. Then we quickly said, all right, now you're going to have to learn what the hell fundamental analysis is. And now they're off to learning what the basics of technical analysis is. As Grim was even saying, between the lectures and between the group tutorial session, we're doing the Broiler Chicken Show a little bit later here today because these are pretty big modules, so they get tons and tons of questions. And I love this about Graham is he's just like, this is just going to take as long as it takes. And I love that kind of attitude. It's not really like, like if you do really fancy yourself a trader and you want to, consider this a profession, there is no stopwatch running. I mean, it's going to take you as long as it takes you to understand this shit. The good part about it is, it's big. The reason why a guy like Warren Buffett does as well as he is because he there's a model that he really likes FA wise, and he just keeps doing the same damn model, rinse and repeat, just keep doing it over and over and over, and it just keeps making him richer and richer and richer. I suppose he's going to be like a dinosaur reference now. We probably have to think of the new hot, sexy hedge fund manager reference. Huge mountain of material for you level oneers right now. And, frankly speaking, it's not like something that you're going to learn all this stuff cold in like a month or two. I mean, come on. the point here is we have to give you a basic framework to think within, and I try to hit on as many of the key topics as possible. This particular week, you're basically understanding, if anything, you could think of fundamental analysis, you could think of strategic planning. Later on in the level 3 program, just speaking specifically to you level 1ers, in our strategic planning, and even to a certain degree in our technical analysis introduction, we just barely introduce you to things like intermarket analysis relationships. I did see some questions about the yield curve in there. I mean, they understand there are people that literally, they dedicate their whole lives and their whole careers to just these individual topics that we happen to just touch on a week-by-week basis. So, intermarket analysis relationships are so important that actually we revisit it back in level 3, and we actually dig apart some of these deeper concepts in detail. But make no mistake, I do understand that you probably feel a bit information overloady right now. Remember too, level 1ers, your key here is the whole point of the level 1 is to come away from this program understanding the significance of planning. And maybe you're not, totally hip on things like, fear, greed cycles and, planetary conjuncts as events and stuff. And you don't want to go down that rabbit hole. Okay. But at the same time, too, I think it's important in your plan to just clearly articulate what is it you want to do. And where do you think this world's going to? A lot of you guys, of course, are here because you love crypto. Crypto tastes great. And I have to say, crypto is the future. Anyway, I see it, man. It's coming 100 miles an hour. I think you could actually make the argument that crypto actually really started back in the late 80s and early 90s. And there's a couple really interesting Canadian sort of first attempts at doing cryptography. And more importantly, trying to do these sort of like centralized ledgers to track asset net value. It didn't work. It blew up horribly. But the point here is that this technology has been long in development. The Bitcoin and Satoshi Dream probably really got validity when this thing called the internet really kicked in and we could have this decentralized sort of validation process. Back doing this off of dial-up modems, that would have been tough. Can you try and imagine mining Bitcoin with a dial-up modem? I don't know whether that'll work or not. Anyway, so, as future, I want you in your level 1er, your strategic vision, your plan. Why am I doing this? And, what does the future kind of look like? And does what I want to do correspond with what that future looks like? Ironically enough, I think you could make the argument pandemic and all that kind of stuff has actually further accelerated this whole moving into this online world. And I get the distinct impression that that's not an accident. But, that's here nor there, tinfoil hats, blah, blah, blah. So, if anything, the good part about it is if you were able to load up on a big whack of crypto down here through all this correction here, I think you're laughing. We just got to get through this funny little transition window. And just try and remember, everybody, really, really simple. Just don't fall in love with any one story in particular. Spread the jelly out. And then, when the market does pop and... if you're watching this feed for the first time or, you're relatively new to the space, just remember this. It's really simple. When it's snowing, that's not a bad time to be accumulating stuff. And when it's going, and really in crypto, when it's gone, that's not a bad idea to be selling into those time periods. It's remarkable how cliche this game really is, guys. It really is. So, unfortunately, the sort of the yeah, I know there is some sort of nursery rhyme in there, Bob. Um, Bob, I was thinking about you. I actually Googled what were the poll results on October 15th, 2016. And I hate to say it, Bob, but I still do not believe that they're the same. They're very, very different pictures. I don't know whether we want to open up that Pandora's box here. Maybe we'll wait for a daily brief to do that again. Yeah, no, it's all good. It's all good. I mean, it's just, when a debate starts, Brian wants to, come to the conversation informed and educated. And I'm the first guy to say that if the pictures looked exactly the same, I'd be like, well, Bob, you're right. But I'll show you that in a daily brief. I saw you over there on YouTube, so sorry to derail us here. Okay, so back to our conversation here. If you buy into this whole crazy, Brian's fear, greed cycles, for whatever it's worth, I totally believe this shit now. I believe it more now than I did back in 2000 when I knew that the dot-com bubble was about to burst and we were getting ready for 20 years of commodity asset preference. And the irony of it all is probably most of you don't even remember what that world looked like. Back then, you couldn't give away an ounce of gold. You couldn't give it away. Nobody wanted it. You guys are all clamoring for gold now, that's for sure. And I see the U.S. Mint has gone and raised the price of a 1 ounce silver coin to 67 US dollars an ounce. Oh, goodness. This Fugazi, man, they totally pulled it off, didn't they? Totally pulled it off. So, I don't know where the apex of this cycle event comes in. I do find it's awfully coincidental that these align with these Jupiter-Saturn conjuncts. For whatever it's worth, 2000 was a very well documented Jupiter-Saturn conjunct. And of course, back in 1981, I think it was, Jupiter-Saturn conjunct. And if you go look back in your history books, I do see that there are just stunning similarities between late 1979 environment and what I see happening around the world today. And more importantly, what I see happening within the United States of America. As really, I still believe to a certain degree that the Jekyll Island guys basically run the world. I think that this particular... there they are reminding me. Yes, we do, Brian. I think this particular celestial event is actually all about a consolidation of power. And I think they've done that very well. And frankly speaking, really, to be perfectly honest with you, the way I look at this world is, it's basically just a whole bunch of mafiosos just driving the bus. Question is, who's got the biggest dick, right? And whoever's got the biggest dick, they usually dictate terms. So, that's basically the world that we live in. Does that mean that we can make money from trading? Or, I think so. I believe that the Fugazi of you're not totally trapped is important for the 1%. They have to give the impression that there is an out. The issue here is it's not easy. I have seen people do it, though. I've seen people, Fugazi, excuse me, I don't know, I'm totally pronouncing it. I have seen people do it, and I've done it basically for myself. This is about third or fourth time around. You could go from having absolutely nothing to having a very comfortable lifestyle. It's not unheard of. The issue is, of course, is you have to know the rules of the game, and you have to be damn patient and damn disciplined. And the worst part about it is, when everybody around you, of course, is most bullish, that's usually a dangerous time. First time watching me at 1x speed, you're probably going to find that I'm pretty boring. This is a lot more fun when he's at 2 times speed. That's good. There's some people that join our daily briefs late, and they play the daily brief on like fast forward speed just to catch up. That must be freaky for them when they hit real time, but then like all of a sudden Brian just slows down to crawl. I gotta really mess with you 2x people right now, because I'm gonna talk really fast, and then we're gonna talk about charts, and then we're gonna talk about Bitcoin, and then we're gonna talk about Ethereum, and then we're gonna really fuck you with your head. Okay, Brian's wasting time now. Sorry, everybody. Okay, so big picture. This is a difficult time. We're going through a massive transition window. Look at all my funny tweets and previous videos for more on things like Jupiter, Saturn, Pluto conjuncts. Actually, I watched another one. Not watched, but somebody in the lounge shared a really cool link I hadn't seen before on the connection between plagues and the Jupiter-Pluto conjuncts, which, by the way, there's one coming up here in November. And actually, the S&P 500 chart that I have been showing you guys, that I've been most interested in, from what I understand from this article, is all about the sickness. And it's interesting how we had a first panic wave there in March. Then we had another panic wave there in sort of, end of June. And now we're getting a third panic wave here. Probably it's going to peak somewhere around the end of this month, beginning of next month. And you can sort of see it, right? Because like in Europe, they were about 2 or 3 weeks ahead of the U.S. And so in Europe right now, they're going through major lockdown shit. And so, gee whiz, right into the end of the month, by my hunch is probably most of the United States of America is going to go into big lockdown shit. So, what a coincidence. That all sort of aligns nicely. Also, too, I thought it was fascinating, this Jupiter-Saturn conjunct. The last one that was this sort of close together was back in, the 16th century, long time ago. In fact, actually, I'm watching another really cool video on the connection between the Mount Pinatubo explosion down in Indonesia in the year 532, I think it was, and all the various different sort of ramifications of that and how that civilization collapsed. And I think there was some celestial events around that, too. So anyway, fun. That's what Brian does for fun these days. I guess the point I'm trying to make here, and I see it also, I've seen it in news articles that people have been sharing on the site, lots of comparison to the last days of Jimmy Carter. I remember specifically in the summer of I think it was the summer of 1980, watching him, maybe it was 79, sometime in that time period. Watching him on TV, and day after day after day, we kept going through the Iran hostage situation, and there was just nothing anybody could do, and you just felt completely inept. And the headlines were about runaway inflation, and there was nothing we could do about inflation at that time. How ironic, right? Because that's the exact opposite to what we're having now. Now we have runaway deflation at the exact opposite end of the cycle. Is that a coincidence? I don't think so. J.P. Morgan himself said, billionaires and millionaires, the quote. So my hunch here is that this is all happening when it is supposed to be happening. I do find it really interesting, too, how the banks make no money whatsoever lending money out at 0% interest. So what's actually happening right now, I find this fascinating, is banks are being very selective about issuing new loans. Like, you got to have like pristine credit quality if you want it. But what's really interesting, I find, is this whole forbearance thing and how basically people are just being encouraged to, don't worry about paying your mortgage or your rent right now. We just push your mortgage out a few years. And, oh, by the way, we'll probably have to refinance, especially people have like 5-year variable rate, 10-year variable rate mortgages. By them pushing those out, they know that you're going to have to refinance. They know that this is the bottom of the interest rate cycle. So they know by definition you are going to have to refinance at higher rates, which means they're going to make more money. It's in their best interest to get you to forbear as much as possible right now. Doesn't that kind of seem like a nice, convenient coincidence, the way the economy's been brought to its knees? And is that directly related to COVID? I don't know. I mean, I don't mean to be rude. People hate me when I do this kind of stuff, but annually, I think somewhere around 50 to 75,000 people die of the flu every year. So this past year, COVID deaths were, let's be generous. Let's go with the number. Let's even say there was even more in the States. 250,000 deaths. Okay, well, so that's what you're really saying is that's a really bad flu year times 2 or 3. Well, okay. I mean, well, that's fine. I mean, I can appreciate that's pretty shitty. But I think this, we're probably talking like trillions of dollars here, especially in the amount of interest that could have been foregone if borrowers had simply just stayed on track and been able to pay off all those debts and mortgages right on schedule, tickety-boo, no big deal, versus, say, rolling out maybe like another 5 years on the debt. And, worst case, what I'm seeing is there's actually people going into more debt, because what scares me is, the powers that be, when you're in a crisis, and I especially find that keep in mind, I've worked with the Canadian government. My wife was on long-term disability. She was basically diagnosed mentally ill, almost the entire time that I knew her. My son, of course, severely disabled. So, we leaned on the system and worked with the system as much as possible. So, ironically enough, I'm actually the type of person who can actually comment on what the system is like from the inside. And what I've found when you work with the system is when times are tough, the system will help you out. And I think that's great. And people will be relatively kind because people are nice. But when that crisis passes, then the system can become as cold as a stone. And that's what I'm really worried that's happening here. Oh, we'll see what happens. That's sort of Brian's philosophical rant for the day. I do see that, we are in crisis right now, and the powers that be are being just relatively friendly. And relatively, hey, you want to borrow money? No problem. Come borrow money. But you're borrowing. And then, what I'm really worried about is how renters and stuff have just sort of decided, hey, I don't have to pay rent. It's no big deal. Nobody's going to come at me. That'll work for now while we're in the crisis. But once you get out of the crisis, things could get really nasty. Not that they're aren't nasty enough for the bottom 95% of us as it is anyway right now. So prepare yourself. What I'm really worried about is people are going to sort of, the government's going to take it. People talking about universal basic income right now, that's going to be a thing. Well, hello. How do you actually pay for these universal incomes, And this is the same sort of thing that happened in 1980. Keep in mind, 1980, that was the absolute pinnacle of the Soviet Union. I remember Moscow Olympics, 1980. That was all the rage. Back in the late 60s, the Beatles were writing songs back in the USSR. I remember our neighbors. They drove Lada he was a professor at the University of Ottawa, and he was all proud of his Lada. So, socialist movements and this whole idea of things like universal basic income and stuff, they work great when you're in one of these fear apex peaks. And you could argue, the socialist programs of the Great Depression were sort of through that fear cycle. But make no mistake about it. Once the dust settles here, the banksters. What I fear here is they're going to inflate the part of the economy that's well structured. So, things like Mr. Gates, Mr. Bezos, they're well positioned, and those stocks are going to get just staggeringly high priced. I might argue things like, if Mr. Vitalik can wrap his head around this scaling issue and the way that fees just escalate with an extreme ramp up of usage of his network. If he can get around that, then I think things like the growth of something like Ethereum and all the various spin-offs from it are just going to be staggering. But those people that are heavily indebted, those people that are, not in that sort of cutting edge of our economy, I think they could easily be left behind. If anything, what I'm really worried about here is this idea of American leather and saddle. So think about American leather and saddle and what happened to all of those kind of industries, parts of our economy coming out of the Second World War. Because I think that's sort of the environment that we're in. And, coming out of the Second World War, what were the industries that did really well? They were things that people never heard of back prior to the Great Depression. So, okay, enough blah, blah, blah. Let's get on to the markets. I see people over on YouTube are going, does this guy look at price charts or what? Monday to Friday, and actually just FYI on the daily brief recaps, I'm thinking Thursdays I wouldn't mind just taking a day off because Julian and Kevin are doing a great job on the baby powder report on Thursdays. Maybe we can get Julian to do a daily brief recap for you. I don't know. But Monday through Friday, except for Thursdays now, maybe, I do just a quick overview of the risk on, risk off kind of environment. I think this gives us a pretty good framework for sort of expectations going forward. Heading into the weekend and just generally speaking, especially things like the junior stock market, very, very strong. Things like the U.S. dollar index as a fear greed proxy, flashing risk on. So. And then, the stock market itself, the big indexes, I think we actually have like an inverted head and shoulders going here. So boom, 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 boom. And if I do Foggenbaum chaos levels off of this particular consolidation range, I can actually realistically think about things like this trend line up here actually being tagged, maybe even up there, something along those lines. I think I was doing like a trend channel there, but anyway. Point being that I could very easily see risk on environment. I could see us pop pretty hard here. I'm curious to see how oil's going to act. Oil technically should be a risk on proxy, but at the same time too, it's an old story. It's dirty, it's ugly, it's politically incorrect. Green environment, green economy. So, if anything, I'd like to see oil start to underperform here. I wonder whether this move here that we just saw over the summer is just nothing more than just a dead cat bounce, right? I mean, this silly thing went to minus $30, which is just purely a play to screw the ETF people over. But I think, just if we think just dead cat bounce kind of idea. So where do we go with energy prices from here? I would personally prefer to see this break down, but I wouldn't be surprised if you look at the profile. I wouldn't be surprised if actually there's a bit more up to go here. Jerks. But anyway, play your alternative energy like I know we did on the site. We've been looking at the solar stocks. fuel cell stocks, those kind of things. If this is a risk-on environment, those things should catch bids. There's what was Kevin? You're here. What was that one? Remember the little trucks? I was like, I love those trucks, but I hate those goddamn tricycles. AYRO. Yeah, so that's the kind of name that I could sink my teeth into. AYRO. As sort of like an alternative, green technology, their electric vehicles, that kind of stuff. If, you should look at this and go, yeah, well, there's a W, big surprise, 50% levels up here, so, But what a surprise that that Beamish guy likes a name like this. So that's the kind of thing that I would prefer to be investing in if I'm going to play that sort of energy play angle. Really, the point here is risk on for you guys is, how do I say this? I like crypto, but I don't like what I'm seeing here price action-wise on like a weekly basis. Heading into this November, December apex of whatever this cycle is, I get the impression I've been actually it's kind of cool because the level 3ers are just going through this right now, and I have been talking about this ad nauseum for the past 3 or 4 years. No, not that long. 2 years, we'll say. I wonder whether this big honking Gardley here is working. We're just right on schedule. Everything looks to me like this goddamn market wants to work its way up into here. It's fascinating how that comes in the first quarter of 2021. I wonder if there's going to be just some sort of great orgy of risk on. And this is what I'm really worried about here. Is, most capital markets, in my opinion, are, especially in the States, are driven by tax reasons. So if we have a big melt up in risk on assets, things like Bitcoin zipping up here, what might actually be going on underneath the surface that might explain this asset appreciation? And I believe that to a certain degree, this isn't really the best image to show you, but I believe to a certain degree what's going on here is on the anticipation, whoops, I screwed that up, on the anticipation of a substantial income, and I think it's actually going to be on more of like a capital gains tax. This is a sloppy chart. We should probably look at this. I just wanted you to see that big Gartley pattern. But that's why I actually had this just up here like this, so we could just look at a clean chart. So if we look at that, and actually really you probably can see this off a monthly chart now. Boom, 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 boom. 78.6. Boom, there. So according to this, that looks like about 16 G's, which I like because, Brian, candle bodies for trade locations. And I'm going to be super jazzed once we get up above this sort of 14,000 area. 78.6s, reload zones, all that kind of talk. And it'd be interesting to see if we just even go off like a clothesline basis. Oops. Yeah, that on a clothesline is going to take us up into 13.6 or so. Actually, that'd be interesting. Clothesline to clothesline, eh? So I wouldn't be surprised if this is some sort of nuts. I mean, typical Bitcoin, right? We always say, hey, somebody's there, like, is this guy going to say something I can write down so at least I know that I got some value out of this? Always say Bitcoin never can finish a run without some sort of horrendous blow off top or blow off bottom. It's just every single Bitcoin, you can basically set your watch to it. So, like this rally peak here, like this happened in like literally a day. It rallies like $2,000-$3,000, right? So that's probably your event. So my hunch is, your clothesline's probably going to be up in here. But ultimately, I wouldn't be surprised if there's some sort of nutso insano wick that takes us up into this event. And again, I just eyeballed that, but symmetrically, it sure looks like it's just somewhere around the beginning of 2021. So what might be going on here, again, like sort of what I said, remember how the tax code works, right? So if they pass legislation, it won't affect year 2000, but it will affect year 2021. And ironically enough, this might actually be very similar to this kind of event right here. I am hearing, Ethereum's got a mainnet launch. I wonder if that's maybe the catalyst that this whole damn thing's moving into. I don't know. But if we think about it just from fat cats, Wall Street guys, how do they want to move markets? Just think that if they can push the market up, and you can see they're not having to spend a lot of money. Look at the relative volumes here. I mean, these are pretty damn chunky. 370, 486,000, 560,000, 770, 579,000, 460. That's a fucking hell of a lot of Bitcoins. I mean, what are they doing here? Even to get it, even through all of this, we got off of the lows, and that dump there, that's where Kavarkinator bought his 88.6 sick-ass motherfucker. But here, I mean, 209, that's not bad. 388, that's pretty heavy volume. That's not bad. But I mean, look at all this. This is nothing. 197, 194. I mean, literally 3 or 4 of these bars is equivalent to 1 of these bars. So, we could probably have a big sort of ramp up here, heavy volume up here, and of course all the guys who bought with Kavarkinator, they're unloading up here. So, looking at that image, I don't have any reason to sell this, for heaven's sakes, no. I don't have any reason to really be a buyer here either. I get the impression we're kind of sitting in no man's land. What I like to do on balance whenever I look, and actually this isn't a bad chart to use. Ironically enough, we always say, when in doubt, zoom out. I like to just simply ask, okay, where are levels where the market said, no more down, you go up? Well, there was clearly one here. So obviously that was some sort of event. It went down and even finished down, but then all that got absorbed back up and go back up, and gee whiz. Look how the market stopped right through there. You could use a monthly price chart pretty effectively here. Remember, you always hear me talking about candle body highs for trade location. Look at that, eh? That's ridiculous. Can you imagine if you hit that level? Where's that close level? That's oh yeah, remember this, 19666. Who's driving the bus here? So we got to did I do that right? Close, beg your pardon. 13,880. And the high here, 13,880 exactly. Oh, that's ridiculous. Oh my goodness, that's incredible, eh? Do you all see that? The close there, 13,880. Brian likes candle body highs and lows for trade location. And it stopped at 13,880. That's incredible. I just gotta let you all absorb that. I gotta go fill my coffee cup. I'm supposed to be doing questions here. Okay, let's see what we got here. Probably got some down votes for just getting up and walking away. Brian's a weirdo. Okay, so actually interesting image. Frankly speaking, that's not a bad image for your trading range on the corn. So about 3 G's on the downside, and this is panic. This is, the sky's falling. This is, I don't have anything to do with Bitcoin. I'm just going to dump because somebody needs cash. If anything, that's probably the best way I would describe any kind of sort of future buying opportunities. I did see one of the questions in the Q&A document, so we could wait till then to answer it. But, just the way that I look at it for something like a commodity is if you can buy the commodity at or below the cost of production, then you're getting the commodity at value. At least you're not walking into a trap. So if somebody came to me and said, well, Brian, I don't want to overpay for this Bitcoin. I want to, if I'm going to buy it, I want to buy it cheap. I want to feel as though I got a good deal. But, like if you walk around a swap meet and you know what the price, you know what the value of some things are, and you look at the prices on various people's tables for products, are those and they probably know what the value of those products are too. Are the prices that they're going to have on the products on the various tables, are they going to be at that price? Probably not. They want to make a profit, right? They know what value is. You know what value is. But does that mean they're going to sell it to you at value if you're a motivated buyer? I got to have it. I got to have it. I got to have it. No, they're going to sell it to you at a markup. So you could go in and buy your Bitcoins here now. I mean, you want to trade momentum, you want to trade setups, okay, there's nothing wrong with that. But when somebody comes to me and says, well, Brian, I'd like to participate in this, remember, the first thing that I always think about is what if this thing goes wrong? If you can force yourself to buy Bitcoins if it ever does get to at or below cost of production, then at least the worst case scenario you can say is, well, hey, I didn't have to invest in a whole bunch of mining equipment. I got the Bitcoins at the same cost that they got them at. They were digging them out of the internet. Unfortunately, most times, and we probably won't get that many views of this video, but most times, most commodities don't trade at cost of production. You have to think about if an asset trades at cost of production, it's going on sale, it's cheap, it's undervalued. So, like I know somebody said, well, isn't Bitcoin the future? And, isn't it growing and there's a limited supply and all that? Well, yes, those are all perfectly valid. And everything being equal, markets shouldn't trade at cost of production because then there'd be no profit margin for the guys that are in the business. The whole reason why they're in the business is because they think there's a half decent profit margin. And usually, the way the markup business works, wholesalers usually, a good example is Saudi Arabia's cost of production for crude oil is about $10 a barrel. Russia has said that its cost of production, it can still survive at $10 a barrel. Canada's tar sands cost of production is $40 a barrel. Now, who's vulnerable here? The Russians or the Saudis? They're like operating S-19 equipment. And then the Canadians, and this is being generous, I think they're probably operating equipment that the cost of production's up here for their crude oil. It's the same principle, everybody. And what happens to the Canadian oil production and also the U.S. fracking industry? Same thing. What happens to those industries if the price of crude oil stays below their cost of production? They go out of business. Simple as that. That's the market's efficiency. Nobody likes that because that means job losses. That means hunger. That means mortgage default. That means bonds, are worthless. That means falling standard of livings. So nobody likes it, but it's sort of the bugaboo about playing the commodities game. Everybody loves the commodity industry and the commodities countries during commodity secular bull markets. I don't know whether you're aware, probably most of you weren't. Canada came within a whisker of basically dissolving itself back in the mid-90s through the last commodity secular bear market. So, at the end of the day, one always has to ask yourself, why the fuck would I actually want to buy one of these things called Bitcoin? I mean, seriously. Let's hope that through this period, we've gotten to the point where Bitcoins are sort of essential services. I don't think they really are. I think you can. A lot of places you can start purchasing stuff with crypto, but I think it's sort of like a kind of an amusing default. Enough people are bugging their politicians that they're like, "What the hell? Okay, yeah, just if they want to do it, let them do it." I don't know what that transition into. This thing has to exist. It is part of this system. Once you're there, then you're probably golden. That's probably this whole evolutionary process. What I hear from people is that Bitcoin basically is the internet's sort of solution version of money. You can call it Bitcoin, you can call it any number, one of these cryptocurrencies. But if anything, I think the word cryptocurrency doesn't do the technology, the service that it deserves. Anyway, so the point that I would just make is somebody had asked, so this is directly asking this question. When I get to the question on the Q&A document, I'll just say refer to this. The point of a study like this is, if I want to invest my hard-earned money in the marketplace, I want to try and see that I'm getting value for my money spent. Too many people come into the market not understanding that they're just not buying value. And then when the rubber hits the road and people start to freak out, prices go back to those value levels. You may be long from substantially higher than those value levels back when people weren't thinking about what value is. But the good part about when you buy value is very rarely do markets really break violently or precipitously lower than value. Usually markets trade at a premium to value. So this image right here, for example, you can see there wasn't, and back here there were S15s and lower grade technology that were mining Bitcoin here, that their cost of productions were up here. Keep in mind, these are like, as I don't even think S19s are actually in full use now. I think people are still just taking delivery of them. Even as it stands right now, I'd say the S17 is, and this is just my opinion, but I don't know. Shane, if you're around, you'd probably be able to answer this. It's probably like industry standard right now, and I do find it damn coincidental that if price did slam down into what we would consider technically appealing levels, that all it would be doing is slamming down into cost of production levels as well. So that in itself should be sort of a tell that, hey, this is cheap. the issue here, and what I'm worried about, is people are saying, well, I can only ever invest in Bitcoin if it's in one of Brian's magic windows. I mean, you can spend your money any old damn time you want. And this asset could do anything it wants. It can go all the way up. It could come all the way back down. But what I'm just saying is you have to understand, I by nature am chicken shit. I like to worry. I like to think, if I actually go out into the public, remember I'm teaching this school, you guys are actually supposed to be like have decent education here. If I'm actually teaching you how you should by default behave in the marketplace, I believe you should behave like a chicken shit piece of crap. Always worried. Always thinking this trade could go wrong. How am I going to get hurt? How long am I going to have to sleep on the fucking couch before my wife allows me back in bed? How long am I going to be in the doghouse? That's how you have to position it. There was a really funny, this hedge fund manager dude, he did a YouTube video. It didn't really go over very well because he was kind of an asshole. But he goes, and I should find the video for the level oneers because it's great stuff. He goes, for whatever it's worth, all you new aspiring hedge fund managers, what do you think your job is here to do? And he goes, you'd think that your job here was to make money. And in reality, that's actually not true. Your job here is to not lose money. Now, when you start from that perspective, then you're best to literally assume that what you're going to do is wrong. And then when it turns out, actually, the setup worked, then you're pleasantly pleased. And then you start putting together a bunch of wins in a row, and you're pleasantly pleased, and then people start turning their heads, and they're like, holy shit, what's that guy doing over there? And that's the way trading, that's the way real, really good traders trade, is they actually assume that the trade's not going to work. How bad am I going to get hurt? So when I'm talking to the public, I could come in, and the cool part about it is we even have free tools on the site right now that we're giving away. We won't give them away indefinitely, that's for sure. But I was even showing on social media and stuff a setup that a student and I built together years ago. And they just basically said, here, you know what? Why don't you see what happens when this, and this happens? And he's like, son of a gun. When that happens, I make money. And I've actually just named it after him because that's the kind of guy I am. So, and then we had the opportunity, which is even better, to get another student who's like super duper hip on programming to algorithmize it. And now, hell, you can join our 30-day trial and just check out these signals as they come in. Beautiful signal there on the 8th of October. And what's fascinating, too, is Seward follows about 20 or 30 different of these different various, all the different exchanges and stuff like that. And to watch them actually, all the signals come in on their own, one at a time, really cool. So what I just wanted to show you guys was, I don't know where the hell I have it now though, but this was the signal from the other day. So feel free to join, pop on the site and mine that information. Where the hell did I put that? Darn. I hate when I can't find these stupid charts. Too many charts, my head's gonna explode. I shouldn't have Twitter open here. That's just confusing everything. All right, where are you? Nope. There it is. So this student, and if you want to take information, how can I learn? How can I get shit out of this goddamn video here that's for free? when you see W's in OBV and W's in, this is a heavily modified Williams percentage R, think of this indicator as more like a stochastic oscillator. It's built on the same premise. So we'll say W's in, what would be the best way to describe this? Linear regression oscillation. There you go. So W's in OBV, W's in linear regression oscillation, and W's in relative strength performance indicators. That's usually a pretty good signal. And sure enough, especially if you can juxtapose them with a W, 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 and a W right there in price. 2-to-1 risk reward. Set it and forget it. And you can see it's just rocking and rolling. And these are the kind of markets, right? It's just grind, 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 grind. Why? Well, you probably heard me say this. Let's see if anybody of you on YouTube can remember this. Once we get past this point here, what should we think, right? So we're heading into like this price action here. What should we think? Can you please comment on longs versus a shorts effect on market? Who does a really good analysis of that is go check out Colin. What the hell is Colin's last name? I don't even know what his last name is. Colin from Toronto, that guy. He does a really cool. He's got this interesting theory going on about some big player over there on longs versus shorts. I think it's on Ethereum or something like that. So he's probably a good guy to. Hey, I think is Colin around here? I thought I saw him on the call. Anyway, if you're on the site, you can check out that. There he is. He's in the lounge there. Anyway. Okay, so enough tooting TRI's horn. I mean, you can basically see exactly what I'm thinking right now. Nice little 2-to-1 setup, Davo coming in there. And I see, generally speaking, the whole market looks very risk-on-y right now. This is kind of what I'm thinking on Ethereum right now. I feel as though this V top here, and I suppose also too, candle body trade location. So maybe a nice stab up into there. I don't know, 98%. That seems awfully high. 88.6, I believe, is an acceptable fib for a harmonic. So, is this new bull market? I don't know. Like, when is the Ethereum mainnet launch? My hunch is whatever rally peak this is, it's into that. Once that's done, though, then what's next? And what I'm really worried about is a political avalanche in the States. And if the Democrats take over Congress, we all know, I think her name is Maxine Waters, she is not very friendly to cryptocurrency space. You all know that. So be forewarned. And also to remember Roosevelt, like, he passed legislation basically outlawing the speculative ownership of gold during the Great Depression. So, but that's the thing, Felipe, is that the Democrats, right? And, I've often told you guys, if you don't know this, write this down. But how do markets usually behave when one party controls the entire government? But either side. Canada is a great example. Canadian stock markets hasn't done anything. I'll show you what Canada looks like. And actually, I think we have a minority government, but the guy's acting like a total despot. But, Canadian government, I mean, this is broken. I guess that's our growth since the year 2000, there to there. And actually, they even checked that original 2000 peak there, just there in October. So, and just imagine what this thing looks like versus M2 money supply. Because keep in mind, all these other fiat currencies, they're all subject to that too. Look at that. There's the Canadian stock market since the year 2000. Something's broken with that image. Jesus, that's horrible. You think it's bad in the U.S. So you could argue that, like Canada, there's been a full-on great recession, Great Depression. Yeah. Be the difference. There you go. Okay, so what was the question I asked you guys? I should have asked you guys. Oh yeah, when is that ETH mainnet launch? Because I really think that's important for us to try and remember. Anyway, what the hell was I talking about? Oh yeah, I gotta tell you. This looks exactly like Bitcoin in year like 2000. This looks like we're heading into the fall of 2000. When was it? Oh, actually, I think I even have that chart right there. There we go. I think we're heading into this right here on Ethereum. That was the fall of 2000 and it doesn't even say. Damn. Where was that? I don't know what Bitcoin does though. Can't comment on that. But yeah, right here. So the fall of 2015. Oh, isn't that interesting? 2015. So I think that's where Ethereum is right now. So that would actually probably maybe squeeze this in a little bit more. Or maybe squeeze this out. One of the two. Whoop. Oh no, I screwed it up. Oh well, forget it. I don't want to tinker with that. Okay, I really want to get into those damn questions. Okay, so let's get to work here. Sorry, everyone. Holy Jesus, look what time it is. Gotta get going for Liam. Okay, so these were questions, I think, from previous, but not too many. So hopefully it won't take too long to get to this. So back on October 4th, I think this was from last week. I don't know whether I answered these or not, but we say here. I have concerns to determine the value of BTC only in COP. BTC is easy transfer, have a limited supply, and is running since 12 years. Ooh, yeah. So it is very well designed. And I mean, I've been here through the whole thing. It's fun to watch all the humming and hawing back and forth. May you explain why the price has to be an area cost of production? I think I can decouple easily. Of course, every miner would love it. So I think this was the question that I had seen regarding that cost of production. So if anything, that's probably a good dovetail. Just rewind 20 minutes, half hour. And you can get my thoughts about cost of production. It's not a classic commodity. You don't mine it to do further stuff with it like silver, copper, lithium. Yeah. The largest of BTC is to be the world currency. The target, excuse me, of BTC. Oh, really? Is that what it is? And the miner should profit from transactions and not mainly through mine new Bitcoins. Yeah, well, and that's a problem that I think we'll definitely have to address down the road. I think just as a simple solution, people have said, oh yeah, we'll switch to POS and sort of getting paid through fees to justify mining. I don't think that answer is fully explored, and my hunch is when we get to that, there's going to be a huge debate as to what happens with Bitcoin and the value of it and all that through that event. I think that's like in 2146 or something like that. Is it 2146 or 2046? I can't remember. But that's not for a very long time. I'm not even going to think about that for now. It is something that we have to worry about down the road. I guess the question I ultimately have here is Bitcoin going to be the only cryptocurrency out there? And I don't think the answer is yes. I think that there will be many different versions. All right, thank you, Martin. So if anything, I kind of like whatever that rally peak is into that ETH main net launch. That to me sounds like perfectly logical. So what I had said before, and keep in mind, I had to talk people through all this market, right? Where we had cost of production. We even had guys like Mr. Eat His Penis. And actually, it sounds like he's going to be forced to eat his penis now, eh? According to this judicial court review, you are legally obligated, Mr. McAfee, to eat your penis. So here is a knife and here is a fork, and we will assist you in the process. Oh, and by the way, we're selling subscriptions to this video feed. So I remember distinctly through this, Mr. Penis Eater said, I'm buying Bitcoin at, what did he say, like $1,000, $2,000 a piece, something like that. And the market just kept going up, and keep in mind this is a monthly chart, just kept going up and up and up and up and up and up and up. Right? So a lot of people took exactly this same attitude, like, fuck you, Brian, you don't know what the fuck you're talking about. And that's fine. I don't have a problem with that. What cost of production really helps us understand is, when the euphoric nutso stupidness of every bull market is done, where can we think about this thing actually stopping going down and people starting to say, hey, you know what? Maybe I'll actually buy some of these. And we did up studies. There was a guy on the site, his name is Tony, and he came up with a $2,500 cost of production, which was pretty conservative. And sure enough, once we start getting down into that area, price stops going down. So it really helps, especially when we get into this kind of environment. It's the kind of thing where I don't know where the hell the top is on this. Nobody did. And the top was quite a bit further than anybody ever expected. It's not saying that, okay, if we were right here, okay, well, you can only buy your Bitcoins at cost of production. But we all know that we're not allowed to chase. And gee whiz, what a surprise. What Brian tells you, use your reload zones if you want to invest. So now you can even say, how many reasons should we have to justify considering taking a trade? You now have fundamental cost of production, and you have technical at or below reload zones. Hey, I'm starting to get some serious reasons to justify taking a trade. But when you're heading up here, right, what you're supposed to do is you're supposed to not chase, and this was impossible to do. Even through this phase right here, there's one gentleman who lived here in Vancouver, looked me straight in the face and said, Brian, Bitcoin price will never come back down again. Never. You don't know what you're talking about. 20, 30 years in the business? Fuck you. You don't know nothing. You're a stupid-ass, chump-ass bitch, and your reload zone concept doesn't mean jack fucking shit. It happens all the time, folks. All the time. Maybe that's a little over the top, but hey, hopefully I've driven home a point. Often I sometimes think that actually I'm a little bit stronger than I to myself. But I'm telling you, people looked at me straight in the face and said, Brian, Bitcoin's never going to come back down again, ever. I tell you, it happened. Fuck a bum. So anyway, there you go. So hindsight's 2020, isn't that wonderful? But the stupidest thing is we had the same conversation through this. It's identical. It just kills me. This is, if anything, this was even more beautiful because look how it just flirted with 78.6. Didn't even give Kevin his 88.6 fill. So anyway, point of the matter here is here we are right now. As I said earlier, to me, it looks like we're heading up here. It just does. Does that mean I'm buying value here? No, it doesn't. Does that mean that you cannot hunt setups and trade this? No, it doesn't mean that at all. But it does mean that if I'm going to be talking to the public and I'm going to say, you know what, you're not walking into a dangerous situation buying here, I can't say that statement at all. Sucks, but just is what it is. Now, the cool part about this is, and I don't know where this thing tops out, but exactly the same logic we did here. Wherever this thing does eventually top out, we're just going to simply draw our reload zone. We can even go off of Kevin's big honking tail there. And I don't know where this thing's going to top out. Is it here? Is it here? Is it here? Is it here? We could go to new highs. I doubt it, but we could. And notice that reload zone doesn't really move a hell of a lot, right? It says 61.8 to 78.6. You can see where this sort of band is. It's saying that, anywhere down in this area is probably a half decent price. Then we go back to our cost of production chart and we see that, ironically enough, if we get price substantially below these bands for prolonged periods of time, then you have the situation, do we want Russia and Saudi Arabia controlling the Bitcoin market because they're the only people that are still left in production? No. What is the one thing that you can look for that actually will mark that Bitcoin really can't go down anymore? You'll start to see the talk of it. I saw it all through. I did see talk of it through here. No, that's not where I want it. I did see. Hopefully, we still have this on here. Now remember, I've been like literally teaching in this space, this damn thing, since here. We did see talk of it through here. I do remember specifically talk of it started to develop through here. As soon as we get over to here, that all disappeared. If you ever hear that kind of talk, it's the absolutely perfect analogy that we're very, very close to some sort of bottom. So right now, we don't even have the slightest concern about that kind of talk. There's tons and tons of money to be made in this space. So. Okay. Wow, gee whiz, that sure was a long rant. Sure hope I helped you there with that rant on cost of production. Where was that over here? All right, so what else we got? Okay, Brian Shan, please delve a little deeper into how we might interpret a volatility index specifically as it relates to crypto. By BitcoinWorldwide.com volatility index as it relates to opportunity to trade. What are we looking for is a broader view. Well, I don't know who asked this question. I hope you're here. The easiest way for you to think about volatility is we always want to he doesn't put on any weight in his old age, eh? Alex is sharing a picture of Vitalik when Ethereum 2.0 finally launches. That's good. If you can think of it this way, it's really, really simple, and this is sort of the way Mr. Bollinger likes to look at the world. When assets, and really any assets, stock, bond, commodities, whatever, crypto, when it's super volatile, that's not really a good time to participate. It by definition, the volatility in itself implies there's a lot of activity going on. Ideally, we would like to participate in markets when there's very low volatility and there's not a lot of activity. You could argue that low volatility in itself is sort of an agreement on price. That for a given period of time, the market has just decided that this isn't a half-decent price for this asset. So for risk takers, seeing a movement from a low volatility into a higher volatility environment, that could be an indication that, hey, we've just gone from an area where basically people agreed on price to, now people can't agree on price and get ready for some wild price exploration. That's actually the basic concept behind Mr. Bollinger and his Bollinger Band thesis. So for those people who like to play the market, and it is a school of technical analysis that I haven't formally included in our education program. I wrote the program actually about 4 or 5 years ago, so it's probably long overdue for a revamp. But there are a number of volatility indicators, volatility tools that you can use that can help identify markets that are in high volatility states, which we kind of want to avoid, and markets that are in low volatility states where, if we're getting indications in a low volatility state, remember we said low volatility means sort of price acceptance. So if we're getting low volatility breakouts to the upside, then that's not a bad place for us to take a risk. Because what it means is we're going to buy an asset where the market feels as though it spent a lot of time here. It's relatively low volatility, basically acceptance. We're going to buy the breakout of this range here because something's happened to change that perception of fair value for this asset to the upside. Which means that if that's the case and it's got some traction, it's not likely price is going to go down because it's spent a lot of time establishing a floor. So, that July period, and actually through June and early July, was a good example of that, where price ratcheted up off of the floor. Through this period, you can see the width of the bands. This is a very volatile period. But over time, the market basically accepted that this was an agreeable price for this asset. And so, as measured through Mr. Bollinger's bands, the volatility of the market is coming out, in essence, accepting this level. So it's a trade idea for us to say, well, if we break out of this accepted range, I'm going to buy, and I'm just going to simply risk to the other side of whatever that little range was. And turns out, it was a pretty good idea. It kind of looks like we just got another one of those signals. Market jumped up, then jumped down. You can see how volatile things are. As price settled down over time, the volatility came out of the market, and we've broken out through the top. Volatility players buy that breakout and going to risk down to a reversal to the downside of that range. So you can use volatility and its sort of contraction as sort of a, hey, get ready kind of signal. And then the breakout of a low volatility range can often give you a half decent signal. Now, you can look at various different indicators for this volatility. So this happens to be a study of what's called standard deviation, and that's just a purely a statistical model. Right? What is the probability of price action given its recent price action? There are some people, Joshua, and if you're in the class and asking this question, then that means that you're on the site. So there are people like Joshua who've taken Mr. Bollinger's study, and it turns out that and actually Kevin talks about it in his daily briefs. They've actually built like a script that can identify what usually the duration of these squeezes are, and just about when you should expect that this squeeze should be resolved. And actually, ironically enough, you can do time studies off of this, and it's fairly usable. So, one might argue that if you had good location, then you had this as an indicator confirmation. It's Brian's second rule. How many reasons should we have to justify taking a trade? Right? I think we looked at this as like a bot setup. We had a bunch of lows there, and A, B, C, D's take you higher. So you got location. You've got indicator confirmation, squeeze of volatility, trend line breakouts, whatever. And then, of course, hopefully what you see through this is, of course, that's a big honkin' W. So the market structure actually makes it really easy for us to actually frame that trade. We're just going to buy the breakout of the W and risk against the bottom of the W. Same thing here, right? We're going to buy the breakout of the W, got a risk against the bottom of the W, and you really should ideally on these. Remember, this was also a Davo signal too. So this is a pretty high octane signal. I think also too we've got, we had a, well actually no we're not. Oh, that's too bad. Would have liked to have thrown that in there as well. So no trend line breakout. My hunch is, for whatever it's worth, this will have to come back. And if we can get a W on the other side of this trend line, then we probably have something to work with. Right now, that's a bit tenuous. In fact, actually, what I hate to say it, but what I kind of think I see happening here, we'll see how it goes. But this looks very harmonic. Something like up into here. Probably a test of that high. And I think I remember telling you guys in recent public videos that I was kind of looking for this push. Like if we go back to this, yeah, right here. So I was looking for this push up, and fascinating how we just rallied up, hit Mountain Man, doink. Also too, I don't know whether I showed this in the public videos, this profile was looking very double distribution. So which ideally the profile would wants to look like a parabola. So you can see this rally here of late is doing nothing more than filling in this middle part. And it's done a pretty good job of it. Hey, you can see there's still a bit of a hole up here. And there's still a bit of a hole here. So I wouldn't even be surprised if there's a nice little fuck you up into reload zone, somewhere up in this area. Then a dump back down to fill in all this area, the profile. And then we really ask, okay, is this thing for real? And if it is, then woo, way up we go. Or if it's got to crap out, then maybe we have to come back down and explore this big old empty hole down here. Tough to say. I mean, really kind of jury's out right now. We'll say the boys and I are planning on getting together for another dinner, and we might even start getting really interested. When we hit, and it was interesting, when we hit the Mountain Man level here on, it was like late Friday, really odd time of day for that to happen. It was like early morning Japan, Saturday, late Friday. Usually, Bitcoin usually takes Friday night, Saturday off, but here they did the rally right out of the gate, first thing Saturday morning for Japan. Hit Mountain Man, and I took a screenshot of the options, and it was fascinating, even now. Looking now at the June options, because we want to buy 6 months at a time. That's the rule. And we want at the 50% level for our option to be trading twice what the premium is it costs to buy them now. So if the 50% level off of this range is 8,100, then that means that if I buy, say, like the 10,000 put, then that option will have about 18.5, 19 points, somewhere in that area. So right now those options are still 12 bid, 13 offered. So they're still too expensive. Bastards! Driving me crazy. And I'll tell you, I didn't follow the TRI-SOF formula here and bought like a September put, and it was a stupid trade. That damn formula keeps you out of so much trouble. So I'm not pulling any triggers on any Bitcoin puts until my formula starts adding up. So I still have to wait. And what I'm kind of thinking is if we can get a nice push up into the top here, remember I'd said sort of look left, you can see how the market pressed up into this high. Then it had to back off, or, this is a 4-hour chart. So how many bars is that? So it pressed into that level, then 1, 2, 3, 4, 5, 6 bars times 4. 6 times 4 is, anyone? 23? 62? 47? I know. The answer to every question in the universe is... Anyway, yeah. So 6 4-hour bars is a day. So not a big surprise. We rallied up, hit that day. Basically, we've taken well over a day here. Let's see how they act against this high here. My hunch is this is unexplored space, and there's more business to be done up here. But we'll see. I mean, I suppose if they go and M out and we lose this horizontal support and resistance line, I probably have to do some backfilling. Look left, think the other direction. But for the time being, still looking for that push higher here into this red box. We'll see how it goes. And like I said, now looking at June options, and there are still about 20% or so overvalued. Can't quite justify buying puts just yet, but I'm watching damn close here. Okay, let's see what else. So, hopefully that talked a little bit about volatility. I talked about it in relation to Bollinger Bands. You can do volatility studies off a number of different ways. So this is using standard deviation. You can also, and here's where it gets tricky. In the stock market, you can actually study the volatility of options prices to get a gauge for future expectations. And that's what's called the volatility index, where it will just simply study the price changes in options prices. So this is the volatility index on the S&P 500. You can create a volatility index, and this is relatively simple off of any asset. The only problem is that you do need options information, and this is where it gets tricky with Bitcoin. Because the classic volatility index interpretation is what they call, it's based off of what they call implied volatility premiums. A little bit more tricky when you get into implied volatility premiums and defining them. It's a lot of game of like chicken in the market, but I noticed your question here. You made reference to buy Bitcoin wide volatility index. The question ultimately here is this based off of implied volatility or historic volatility? I believe before we had derivatives and specifically options on sites like Deribit and Ledger and stuff, that this was an index based off of historical volatility, which is a little bit tricky to use. It's not really classic volatility index, sort of the applicability, so you have to be very careful here. Okay, so they say your standard deviation of daily returns based on 36-day window. So in essence, they're just simply doing like 30-day and 60-day moving averages and doing a simple standard deviation Bollinger Band kind of study. These are measures of historic volatility. When the Bitcoin options markets mature, it will be possible to do Bitcoin's volatility index off of implied volatility, but you have to understand that these indexes now, they're not the same as something like the volatility index that I show you on things like the CBOE. So super, super, super important that we just distinguish the two. They're apples and oranges. Could you use the historic Bitcoin volatility index to help you time your trades? Where the hell's that damn question? Right here. To help you time your trades on Bitcoin? It's more of like a coincidental indicator. Because it's based on historic volatility, it's just going to simple follow real-time volatility. And if you can approach it from the perspective I just told you, thinking about using this like a Bollinger Band kind of standard deviation kind of tool, okay, fine. Just remember what I said there. We're looking for the squeezes in volatility, and we're looking for that contraction. Then the breakout of that contraction. And by the way, Ewald, I learned that Bollinger Band breakout contraction trade in 1995. So that's how long I've been trading Bollinger Bands. And yeah, I do know my shit. I've always tell people there's nobody. The reason why I took the path that I did, and thank God my wife let me do it, right? And that's the whole reason why I can sit and talk with you people. I wanted to, and this is just because I'm a goddamn know-it-all. And the worst part about it is you don't make millions of dollars being a know-it-all. You just end up being fucking ignored by people. Because, gee whiz, there's that fucking loudmouth know-it-all again. But I never wanted to have a conversation with somebody in the capital markets where they could say, you don't know what you're talking about. So that used to frustrate me because most of the time in the financial services industry, when people talk to you, they're actually talking bullshit. They're blowing smoke up your ass. Which is sad, right? Because we used to even say, I used to be a VSE floor broker. Well, not floor broker, VSE broker. And I used to sit there with these guys, right? It's exactly like Wolf of Wall Street. Exactly the same thing. You go, look at it. If they don't take the pig shit, you switch to horse shit. They don't take the horse shit, you switch to bullshit. They don't take the bullshit, you switch to chicken shit. The point here is that 9 times out of 10, most of these people are just blowing smoke up your ass. Buy Bitcoin at $11,000. Oh yeah, that's a good value. Do you even know what value is? No, but hey, the sentiment, everything's pointing up, so that must mean it's a good value. Bitcoin will never go down again. So, yeah. Oh Jesus, am I talking too long? How long have I been going? Most brokers, all brokers are salespeople, not most. All. Take out the word most and put in all. And it's brutal how corrupt they are. Oh, God, it's so brutal. AE over there on YouTube's going, most brokers are salespeople. Yes, they are. And it's like, not only are these people incentivized to actually sell a certain product, and I remember, man, I worked in a lot of these places. I mean, it's embarrassing how corrupt these fuckers are. But they will actually penalize you if you do not sell their product. So, oh yeah, you don't get invited to the front row of the company Christmas party. You're sitting back at the table back beside the kitchen, and oh, if the door happens to hit you in the ass a few times during the meal, too fucking bad. That's the way that game works. It's terrible. Like I tell you, half of the reason why I'm doing this shit is I want you people to empower yourself. You don't have to play that game. The world is actually really evil. And what I find is it starts at a very young age. It actually starts with like professional sports in the high school environment. I think that's where it starts. And then that sort of, I need to be accepted. The older people, they must know what they're doing, so you have to do what they say to be accepted. And that just transfers right into the fraternity system in universities, which transfers right into the working world. Got to get that great job. Got to get that awesome pad. Got to get the sports car to get the chicks. Blah blah blah. Our whole system is designed to feed all of these human robots in that direction. So, if anything, what I want to do, and I sure hope it happens, is I can break that model for you. You don't have to live that life, but you definitely have to know what the rules are, and you have to know exactly what the real world looks like and what are the games that the 1% play. Okay, so I hope that helps answer that question about the volatility index. Just be careful with that. It's not an actual like options-based volatility index. It's more of like a Bollinger Band standard deviation kind of volatility index. Okay, I think I answered those. Now let's head on to this here. So, Brian, what do you think about the following statement? Technical analysis sucks. Okay, sure. What? No, Brian. Technical analysis works best. Works best in illiquid markets. What? No, I think you got that backwards. Sorry. Who said that? I don't know who said that. That makes no sense whatsoever. In fact, I seem to remember somebody asking this question, and I thought I answered it already. And you know what? Actually, I did a tweet about this perfectly just the other day. Where the hell was it? It's one of these crazy tweets. Tweeting. Here, this one here. The FU move! So, one might argue, of course, that cryptocurrencies are basically very venture capital. They're also not the type of thing that probably 99% of the population would even understand how to trade this stuff. I know people in the crypto space. I know you guys are smart, but you have to understand you're probably light years ahead of smarts when it comes to this, and that's probably why these centralized exchanges have done so well, because it was pretty easy just giving them an email address, moving some Bitcoin on, and then boom, away you go. Point here is that and especially since we have these centralized exchanges that have absolutely no rules whatsoever. I mean, you do understand that, right? There's nobody watching any of these clowns. Quadriga, perfect example. Mt. Gox. I mean, Mt. Gox guy, Roly Poly, he was basically spending the money as people were depositing the checks. So, you have to understand this is this environment. I get the impression that there's some people that like Cryptopia, Crapsy. I mean, the list goes on and on and on. There are some people in this environment that if they can help you do business, we'll say, on their exchange, which might generate commission fees for them to help them keep the lights on, do you think they might entertain that idea? And it's not really like they're doing anything in your account. Well, you happen to have your stop loss order working. Oh, we just happen to push a market around because it's relatively illiquid, because it is venture capital, because it is an exchange that has absolutely no rules. Can we fuck around with the market and see if we can wash out some weekends? You better believe it. So one might argue that, if this was a very robust market, hundreds of thousands of contracts, maybe futures contracts, millions of shares, whatever, we might not be as susceptible to these kind of one day, bang, wash out all these weekends, and then right back up where it was by the end of the day. And it turns out that the bottom holds in fine, and the damn thing was a bottom here after all. This would be the hallmark of illiquid market state. Doesn't mean it can't happen on bigger markets. But what I would just simply say is, with regard to your question here, technical analysis, first off, this statement is very broad. What do you mean by technical analysis? I mean, you could look at this price chart and say, where the hell did I put it? This here. And say, that's the top end of the range. That's the bottom end of the range. At some point, it would be perfectly realistic to expect the market to trade back to this 50% level. That's a perfectly valid statement, and you have just done technical analysis. So I'm a little concerned. Of course, just saying these two words back to back, this carries a hell of a lot of connotations. What do you actually mean by technical analysis? What I think you're going for here is, do setups that are based off of technical criteria work better or worse in illiquid markets? And I'm going to simply say that technically price action driven signaling systems will work less effective in less active, less liquid, less fluid markets. You could actually argue that the fluidity of the market is purely a function of its liquidity, which is purely a function of the number of participants and what type of participants are participating in the market. So clearly, as you move further and further and further down the food chain to more and more venture capital names, you're going to have less and less and less participants, which by definition is going to create sort of more sort of whales, peoples of significance, of, large wallets in crypto space that can move markets very violently, very quickly, and completely make your technical analysis tools useless. Absolutely, right? The less liquid, the less market participants, the more manipulatable. Did I get that word right? The more manipulatable the asset is. Simple as that. So, what do you think about the following statement? Technical analysis works best in illiquid markets. I think that's a horrible statement, and it's completely wrong. Hope that helps answer the question. I have seen that you chart in daily and weekly charts. Any reason for that? I have been charting in 4-hour charts, however. I want to know your reason in your charting. Most importantly, we always say whenever you're doing technical analysis, when in doubt, and actually, let's see who can answer this. When in doubt, 2 words. First word starts with a Z. It should pretty make an answer for you. Very simple. When in doubt, do something. There you go. Thank you. So, that's the simplest answer. You're going to get a much... I want that too. But this, remember, Nick, I said they started with a Z. And this is assuming that I'm not in the trade. So, you're going to get clearer messages when you zoom out. Kind of like what we did with Bitcoin there a few minutes ago, eh? We actually, looking at the monthly price chart, we actually get some pretty interesting levels. Like I said, son of a bitch, I think I got my trade level there. Look at that. I mean, that's ridiculous. That's a monthly price chart. Also, too, I think it's a good idea that you use these longer term charts, higher time frame charts, to establish the trend. So what I mean by that is, and especially for like level tours and stuff. And actually, I think I was even talking about this on the site and shows and stuff recently. I would prefer, what's the best way to do this? I would prefer that we do things like, we'll look at like, you notice actually, and I talk about this 4-hour chart all the time, so I don't know whether I'm always on dailies, but what I would prefer us do on balance, especially when I'm looking at like the penny stock market and stuff, is I would like to look at this daily chart, and I like to use simple things like moving average systems, and I love my 1330 moving average system. If you're in level 1 right now, you'll learn about this in the level 2 program. And just let it sort of tell me my bias. What's my bias? So my bias right now with the fast moving average above the slower moving average is bullish, right? And then of course we have those Davos signals, so you kind of know that I'm sort of thinking higher time frame bullish. So if I wanted to hunt a trade setup, and also to remember, in my old age, and also too, this comes with a function of how hungry you are. I don't really trade a hell of a lot of lower time frame setups right now. It means that I'm going to be staring in front of the screen 24/7. I have to have a specific plan all set up. I unwound the BitMEX account when the Canadians started shitting on that place. I unwound the OKCoin account because frankly I never really liked them to begin with. So I'm not really, trading like, 15-minute, 30-minute charts on the corn. I'm not really doing that anymore these days. So that's another reason why I'm looking at the whole higher time frames. Also, too, Andrew and Shane and I really love our plan. And I mean, if I could get 50% annualized returns on your money, if we just keep doing that year in, year out, I'm more than happy with those kind of returns. So we're just looking at the higher time frames, right? And buying calls when everybody was freaking out there in the wintertime. Now starting to think about buying puts. Right? We've actually got some Ethereum puts, so we already sold half on a double on. So that's sort of how I'm acting right now. I suppose, we do have one part of the community right now that actually we're specifically working right now off of the 30-minute charts on the Canadian dollar, and my job is to watch the Canadian dollar and the Australian dollar right now for 30-minute swing setups. This is a very specific plan that a team of us on TRI, we really wanted to attack this particular market, so we're doing a lot of work in this, but that's a very specific plan to them. I'm probably outside the scope of the general even commentary on the site for Daily Briefs and stuff because it's very specific to what they're doing. So I don't know whether that answers your question, but the simplest answer is you want simple. They always say, the trend is your friend. So you want to keep it as simple as possible. I like to look at the daily and weekly charts, and then if I am hunting things like swing trades, especially on a lot of this junior stocks and stuff that we're trading, a lot of times I'm drilling down to like 4 hours. I'm not really going too much lower than that these days because, like I said, I'm not really day trading too much anymore. Hope that helps answer that question. And last one, then I'll wind this up and head off to the boy here. What to do when having many losing trades in a row? How to behave psychologically. I have a tested strategy, but I've been having 20 plus losing trades in a row. Wow, interesting. Tested strategy, but you have, frankly speaking, I've never actually seen 20 losing trades in a row documented. That would actually be really impressive. I bet that if you sat down with somebody and said, look, I'll make you a bet $1 that I will lose 20 trades in a row, not a single winner, I would be really surprised. Is this you put on a number of trades over time and you were letting them work and now you look at the balance and you go, oh, geez, they're all underwater? That might be a little different. So I'm not quite sure what it is you're actually trading here. This is a very, sort of loosey-goosey. Is this a setup? Was this a nanny nibble little old lady kind of purchase? So, what's the context of your risk management strategy? As I said, I would be damn impressed if you could show me a trading log with trading one specific setup and you were able to book 20 losing trades in a row. That would be damn impressive. And frankly speaking, if you did show me that, I'll buy that setup off of you, and I will just take the other side of every fucking trade. Because then technically, that means I got a fucking bulletproof 100% win strategy. So you and I should talk, but I'll hire you for you to run your strategy, and I'll just take the other side. That's being a little facetious, and my apologies if you're insulted. That's not really nice. What would I suggest to do to begin with? First off, I would say, are all of these trades exactly the same strategy? I find that hard to believe. Also, two, I would ask, are these staggered over time? Did you put them all in at the exact same time? So what kind of time frames are we talking about? Thirdly, frankly speaking, if you have a tested strategy that has 20 losing trades in a row, this strategy is no good. You're going to have to go back to the drawing board. If it's the type of thing where it's like, well, I nanny nibbled at or below the reload zone, well, you're sitting on that position. Yeah, you better not put more than 5% of your stake in you. You got 20 positions on, you're going down with the ship. My hunch is probably, if you were in altcoin land, you saw what happened on Trex. About 25% of the shitcoins there, they disappeared. So, if we use that as a reference, I wouldn't be surprised if like 25, 30% of those 20 names blow up. This is venture capital after all. Probably maybe 10, 20% of those names go fucking absolutely ape shit, and you get like 10x, 100x off of them down the road. And, probably 50-60% of them do absolutely nothing. Up a little, down a little, but not really much. So this is kind of vague what we're saying here. Like I said, I have my comments read 20 trades in a row. Also, too, I would suggest, and even one of our site principals was going through this recently, what are the ways that you can sort of slow things down? In the library, we do track, but you're saying that your setup is bulletproof and that you're not faltering at all. I don't know whether that is really the case or not. But one thing I would definitely add to your repertoire is our Demon Finder. And what you might want to do with the Demon Finder is actually vet out what your setup actually is, and then create like a checklist on a spreadsheet. And then that way, you can actually check off whether your criteria actually is coming in or not. So that's where I would start. And also, too, in the library, we have Joshua's color-coded. I think I have it in here. Is this it? Yeah, I love this. So, 3 reasons for a trade. If you're saying that every single one of your trades was exactly according to your setup, then you're going to log all of your trades and every single box is going to be green. I don't know whether I really believe this statement, to be perfectly honest with you. It'd be really interesting to dig into this and really see. But those are the kind of things. So you want to get a spreadsheet going and quit screwing around. This has to be completely, pristinely filled out. You want to see green boxes on everything here. No red boxes at all. If there are red boxes, then that means you got to be filling out that Demon Finder. And you have to address why you can't follow your plan. So there's, I think, probably, and actually that's a special treat for you. I don't usually give that out. But I don't have a problem with you working away on that, but understand this is stuff for our advanced students. And really, I don't even get into these kind of conversations until level 3. Because frankly speaking, if you're in level 1 right now and you're not even supposed to be trading any real money right now anyway. So that's, if anything, that's got to be a little concerning unto itself. So, all right, so there's some food for thought to help you on your way. Yeah, I mean, there's something incomplete about this, but there's two things that I think you can work on as well. Really follow Grimm. Well, good. So follow Grimm's lead. Put your money away now. You shouldn't be trading real money right now. You should be learning the process. You should be learning what a setup looks like, which you guys really don't know yet. These are the kind of tools that if after the program you want to go back and address what you're doing in the program correctly or incorrectly with regard to these trades, it would be really interesting fully documenting them and going through and just seeing, number one, whether the setup actually does have all the criteria that you're going to learn about in the education program here. My hunch is no. And then number two, are you actually following what a trader's life really has to look like? And I love that demon finder, because really the demon finder here, the way, like, I've adjusted this to the original one that we shared 10, 20 years ago. I like this because it speaks to not only the setup itself. Believe it or not, just hunting for the criteria and those criteria actually being valid in itself is actually a big part of this problem. But then, okay, we've identified all this setup, but believe it or not, an even bigger part of this problem is, can you actually execute the way you're supposed to? So there's some food for thought. It says here, he is in the class. Like you said, you almost have to see that to believe it. All right. You've seen his 20 losing trades in a row. Like I said, tell me the setup, and hey, that to me sounds like something. I'm just going to take the opposite side of the trade, and we got something. Yeah, absolutely. What I would strongly suggest is, frankly speaking, you guys are in great hands in a level 1. Just relax. You need to be eating your vegetables right now. Just put your money away. Understand what the hell's going on in this world. Strategic thinking. We wanted to try and impart on you, understand the basics of fundamental analysis. What is value, depending on what type of asset you like. This past week was, what do markets in transition look like? M's, W's, triangles, heads and shoulders. What does a fractal look like? We'll obviously get into that very deeply when we get into the candy store. And this coming week, really, we want to clearly articulate what type of risk taker you are. So spend some time seriously thinking about what type of risk taker you are, because there is no right or wrong type of risk taker. There's you. And we'll just build your plan around the type of risk taker you are. So, okay, blah, 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 blah. Hope I helped there with some questions. And got another exciting day with the boa coming up here. So wish me luck. Hopefully I did okay job with these. If you still feel as though you didn't get properly addressed, give me another holler and we'll try again. Okay, talked a little bit of corn there. You guys have a general idea. I'm still thinking uppy here. Certainly no sell signals. I am starting to think about buying some puts. Obviously, big political events coming up here in the United States. I wouldn't really read too much into trend. Because we are being bid up, take advantage of it while you can. If you can, I got to tell you, man, this is so cool. Not only did our breadth indicator guide us really, really well there, basically telegraphing that the market wanted to turn back up here recently. But even our screeners, and even the public ones, this is what I love, is the public screeners here are just, they're spitting up ideas. You want shopping lists, just pop on here and just take a look at some of these names. And Jesus, some of them are just so pretty. So that's just working away, doing its thing. I've got a whole bunch of specialty screeners and stuff that I'm working away on, man. And some of these tools, they're still sort of beta-ish. Stuart's messing around with code and stuff, getting them up and running. But I tell you, man, once these things get up and running, oh, God, sky's the limit. Key reversals for the win! Actually, speaking of which, great key reversal here. Good example, and it turns out it's a cryptocurrency stock. Even better. So this is like everything that we teach in our education program. Fundamentally, this is a company in a space that can grow. Technically, coming right back down into the bottom end of its range. Then why don't we go and throw on some, where are we here? Fall, right? Boom, there we are. Throw on some indicator confirmation, big fat divergences in my MACD. Ooh, really nice and stupid. Below value, and look what comes in here. I swear, this is the most beautiful chart pattern you ever see in your life. Big old honking key reversal. The interesting thing is there's no place on the internet, nowhere, that actually produces these signalings. So I've been waiting fucking like 20 years to find somewhere that can give me key reversal signals. I'm so close. Oh, it's torture. And every time we get close, Stewart backs it away. And then we get close, and then we back away. Oh, God. Anyway, he's got till January 1st. So, once this is up and running, oh, my goodness. Oh, wow, I'm going to be just so tickled pink. But, what I found so cool is, like I said, this is a screen that was built by students. Yeah, you could. In fact, I got to stop talking here. All right. Have yourselves a great day, everybody. Hope you enjoyed the offering. Give us, how does Sassy say it? Hit that like button, smash the subscribe button, and like us on Facey, and don't do drugs. Nah, just kidding. I love that. All right, everybody. All the best, and bye for now.